Taxes are a confusing idea that can become a barrier for a lot of people when it comes to getting into investing. But I assure you there are no hidden tax penalties that will eat away at your hard-earned gains you've made from your investing. In fact, the rules and regulations around investing in New Zealand are very straightforward, and for the majority of people, it's something that's done automatically. For most investors, there's no special tax forms that you have to fill out, and overall, it's a very straightforward process to get your taxes sorted. Rules and regulations around taxes in New Zealand has been a very requested topic, so I thought I'd make sure to cover it in a video. Again, if you have any more content suggestions, make sure to just leave them down below in the comments, or you can also message me on Instagram if you want a more direct way to get in touch with me. I'll be discussing the different tax laws in New Zealand related to the stock market, and just as a disclaimer, this is not licensed financial information. Always make sure to do your own research, and I'll leave some articles and resources down below in the description from IRD so that you can help familiarize yourself on the topic as well. When it comes to taxes in New Zealand, the two main criteria where you actually have to do some paperwork of your own to appropriately declare your taxes is if you're investing more than 50,000 New Zealand dollars in a non-New Zealand stock market exchange. For example, if you have 50,000 New Zealand dollars invested in American companies. If you fall into this category, you'll have to declare it under a foreign investment fund, and this is just a legal document that you will have to fill out, and it's best to get the guidance of someone licensed like a tax advisor to help you fill this out. But again, it's not a very challenging process, but if you do fall into that category, you actually have to do some paperwork of your own and go out of your way to appropriately declare tax on those investments. The second time where you have to go out of your way to declare taxes is if you receive more than $200 in dividends. Essentially what a dividend is a payback to a company's investors from the company's profits. Recognizing the investor as part owner in that business, and when the company is doing well, it will share a portion of its profits with its investors through a dividend. A dividend is expressed as a percentage, typically ranging from anywhere between 1 to 5%. So for example, if you had $4,000 invested in a company that gave you a 5% dividend return, then you would be falling into that category of getting $200 from your dividend. Or if you had $20,000 invested in a company that gave you a 1% dividend return, then you'd also get that $200 dividend payout. So just keep in mind, what is the dividend payback from the companies you've invested into, and how much money do you have invested into them, and will you actually fall into that category of getting a dividend payout of $200. If you fall into that 200 dividend payout club, then you will need to fill out an individual tax return form, or an IR3. Again, it's not very challenging to do. It just requires you to provide a bit of financial information on your part. And remember, if you're finding value in the content, make sure to drop a like for the YouTube algorithm so that more people can see this video too. Something to keep in mind with dividends as well is that they are automatically taxed at 33%. So for every dollar that you get back from your dividend, you'll only receive 77 cents from it. And this is the same both for New Zealand and American companies. In New Zealand, IRD will take the full 33%, whereas with American companies, the IRS, which is just the essentially American equivalent of IRD, will take 15%, and then IRD will take 18% of it. This is because citizens in New Zealand are putting their money into the American stock market, so therefore the tax will be split between America and New Zealand. Again, this is automatic and you don't have to do anything for it. So these are the two main criteria where you actually have to do anything on your end. If you've invested more than $50,000 into overseas companies, or if your dividend payout exceeds $200, whether that be for New Zealand or American companies. Now finally, the last piece of tax information to keep in mind is, are there any penalties or capital gains taxes on rapidly buying and selling a company? Now, I've personally gotten in touch with Hatch and asked if there's any specific timeframes where you have to hold a business to avoid any of these potential tax obligations, and it's a bit of a gray area. There's no minimum holding period from IRD that makes you considered a trader or having the intent of holding a company short term to sell it for profit. I assume as long as you're not rapidly buying and selling companies like a trader, having thousands of dollars invested, quickly chopping between different businesses on a daily or weekly basis, then you're going to be alright and you're not going to be stung with any tax bills. If you're buying a few meme stocks here and there or shorting a few businesses on occasion. It's not something that's going to come up, but again, you always have to do your own research. It doesn't appear like there's a minimum holding period, say the same that there is for a house, where you can receive capital gains penalties if you only hold a property for a certain period of time. It doesn't seem as though there's a hard and fast rule for the stock market as well. There are rules around your prescribed investor rate, but this is more so for the gains that you make from your investments from your KiwiSaver schemes, and your prescribed investor rate is dictated on how much money you make on a yearly basis, and with the upper limit sitting at around 28%. If you want to find out what your prescribed investor rate is, I'll leave the calculator down below in the description box, but this seems to be the most concrete guideline in terms of the tax laws for investing in New Zealand, and there doesn't really seem to be a set time frame on what is considered being a trader with your stock market investing. If you're interested in getting into investing but aren't quite sure which broker is the best for you, check out this video on screen that will give you my complete guide to my top 3 favorite New Zealand brokerage platforms, and you'll see an exact breakdown so that you can make an informed decision on which one is the best for you.